Hello, and welcome to Rock Your Block with First Home Alliance. I'm your host, Larry Laws. This segment of Rock Your Block is about the areas of housing in the community. We will share with you methods that can enhance your experience in homeownership. And for first-time home buyers, we'll help you become first-time home buyers and live the dream of homeownership. First Home Alliance, in other words, First Home Alliance is a HUD-approved housing counseling agency. We're approved by the U.S. Department of Housing and Urban Development. We also can help individuals become first-time home buyers through providing education and financial literacy for them to become first-time home buyers and successful homeowners. To give you a little bit more about First Home Alliance, what I would like to do is share with you a small clip, a rather long commercial about First Home Alliance.
Every day's an endless stream of cigarettes and magazines. Oh, and each town looks the same to me, the movies and the factories, and every stranger's face I see reminds me that I long to be.
The trouble, it might drag you down. If you get lost, you can always be found. Just know you're not alone.
No, you're not alone.
'Cause I'm gonna make this place your home. I'm going home today.
I think it's a silent prayer for people because they really don't want to talk about it. They really don't see it, but you just see signs everywhere.
I've lost my job because of 9/11 and because of the industry I was in. I lost my job. I got laid off.
It felt like there were no opportunities for us out there.
He had a child with his girlfriend. I don't believe he was actually married, but it was a family of three. And one of the things that compounded the problems he had was he got into a very bad car accident as well, which inhibited him from working naturally.
The divorce, the loss of job, the fear, hiding from bill collectors, not being able to pay my mortgage.
Hello, how are you?
Start savings first. The mission is to increase and sustain homeownership in low and moderate income families in Northern Virginia. We service the entire D.C. metropolitan area.
There's been a lot of programs that have been started since I've started working with First Home Alliance, with foreclosure prevention being the number one.
The foreclosure prevention program, where we help families stay in their homes. Those that are struggling with their mortgage come to us for help and assistance. We work with their bank. We work through the loss mitigation process. We work on the homeowner's behalf.
When you lose your home like this, you just don't think of those things until it happens. I don't know.
I don't know why they did it, but they were really mean. I had to go through a lot. Came home every day crying. I was really sad. It was just really hard for me.
As a teenager, it's not the best feeling. I didn't like it and I still don't like it. If I could go back, I would still do it.
And as for what happened to the kids, they were confused because in their eyes they saw a family that was solid. They saw a family that was together. They didn't see a family that would ever fall apart.
It was really depressing. It was the darkest moment of our life, and I can see the face of my kids. They were lost.
There is a high chance that the children may be pulled out of school. that they may have to change residence, of course, to change school systems, and so it can affect the stability within the child.
I would suggest they go to anybody who is qualified, who has experience in the real estate mortgage industry, who can, offer non-biased and accurate advice.
The type of help that First Home Alliance will be able to assist you with is we're going to be an advocate on your behalf. So we want to work with you. We want to work with your bank to get a positive resolution. We want to help you sustain home ownership.
Since inception, we've provided services for over 5,000 residents in the Washington, D.C. metropolitan area. We have helped guide, educate, and prepare over 3,000 citizens become first-time home buyers.
Finally, when we learned that we have our own place to stay, I was really very happy. And when I told my kids, I can see in their eyes that they are really, really happy.
It was a good thing that they told me about First Home Alliance, a place that could help me, a place that would not take money from me that I did not have to give, but that would give me something in return, my dignity and my home.
And I was really, really happy to have found a nice job that fit me well with the qualifications that I had.
And when you contact that individual and you tell them, hey, we got approval on your modification, and when you see that individual again, it's like that mask has been removed from their face. The stress is gone. They're actually smiling. It's not a smile that's just on their face. It's actually in their eyes. You can see it. And that's a feeling that you really just can't explain sometimes, because you know that you had, you played a part in helping a family keep their home.
My mom, at age 65, became a first-time home buyer. As children, we grew up on one side of town where my father farmed land that was owned by someone else. And so I was inspired by that, and I wanted to help other low-income families become homeowners by providing them the financial education and the homeownership education and counseling to improve their the lifestyle, to enhance their standard of living, and to basically work towards that American dream of becoming a homeowner. Welcome back. I hope you enjoyed that clip. That commercial that you just saw was written, directed, produced, and edited by our newest staff member, Larry Gonzalez. I personally felt that he did an excellent job on that clip. And with this increased capacity with First Home Alliance, with Larry on board, we will seek to expand more into outreach in the community. Today's topic on housing, we're going to talk about the program, and with us is Randy Jones, a certified mortgage planning specialist with Gold Star Mortgage. A little bit about Randy. Randy has over 20 years of experience in the mortgage industry. He's a member of the Prince William County Association of Realtors and also a member of the Chamber. Randy is also a certified Virginia Housing Development Authority instructor that has been working with the organization for over 6 years providing homebuyer education. And he also worked with First Home Alliance with homeowners that are forced in foreclosure. Randy also is a veteran and have served in the U.S. military. Randy, welcome to the show.
Well, thank you, Larry.
Yes. Randy, is it true, me as a homeowner, underwater, I can really refinance my home?
Absolutely. Well, today, there are a lot of programs that the government has put out for homeowners and potential homeowners out there. And if you own your home now and you're upside down, as we referred, meaning that you owe more in your house than the value, the current value is, there are programs. One of them is the Making Home Affordable program, which has a lot of different things, the Home Affordable Refinance program. And that really works a lot with individuals who are upside down in their homes.
Okay. Yes, and Randy, today the program we're talking about is the Home Affordable Refinance program. I'm current on my mortgage, and so how can this Home Affordable Refinance program help me?
Well, one of the requirements of the program is if you are current on your mortgage and you owe more on the house than what the value is, there are going to be opportunities that you can actually take advantage of today's market rates and refinance to reduce your mortgage payments, your monthly payments, as well as put you in a better position to have a more stable mortgage program. A lot of people over the last 5 or 6 years, when the market was at its height, took advantage of a lot of programs that at this point probably are not as advantageous for them today.
Okay. Do all lenders and mortgage companies play in this in reference to allowing individuals to refinance their home under this program?
Well, this is a government-funded program, or I guess promoted program. So there are a lot of mortgage companies and credit unions and things that take advantage of this program. It really depends on, and I guess their motivation. I know our company, we're really focused on helping the community make sure that people can not only just get homes but stay in their homes.
Okay. And are there certain maybe investors on this loan that actually will allow this program, and some investors that may not?
Well, there are the majority of the investors out here really participate in this program, the Home Affordable Refinance Program. Some people call it the HARP program. But there are a few individual investors. If they're not funding loans or servicing loans with Fannie Mae or Freddie Mac, they don't participate.
Okay. And who are some of those investors that work with this loan product, this refinance product?
Well, I mean, as far as Gold Star Financial, we are a direct lender, and we have different investors that we work with. As far as private investors or equity investors, they don't participate in these type of programs. So our banking sources and our funding sources, we work with those programs.
Okay. All right. And so as you see here, we're coming up on a break here soon. Uh-huh. And just before we go, what I would like to do is remind you, the audience, if you're struggling to make your mortgage payments, don't sit back and do nothing. Do not avoid your phone calls from your lender. They're your business partner. Open your mail. Contact your lender, your mortgage loan servicer, or a HUD-approved housing counseling agency. You can find housing counseling agencies near you by searching your web. HUD website, again, the HUD website. It is time for a station break, and we'll be right back. Stay tuned. Welcome back. You're watching Rock Your Block, and today's segment of First Home Alliance with our special guest, Randy Jones. Our conversation today is about Home Affordable Refinance Program, the HARP program, and how it can help and how it can be used to keep families in their homes by lowering their monthly payments. Before the break, I kept asking about investors, but actually I wanted to know about those agencies. What agencies participate in this HARP program?
Well, the Home Affordable Refinance Program, the HARP program, is really backed and funded by Fannie Mae and Freddie Mac. They really wanted to take a personal interest in helping homeowners stay in their homes. So when you fund a mortgage for a person and a homeowner gets a mortgage, they're backed, or the mortgage is secured as far as from different agencies. And those are the two main agencies, Freddie Mac and Fannie Mae. And so if they own your mortgage, or your mortgage was sold to them prior to June of 2009, you can participate in this program. And it's very easy to find out if you have a Fannie loan or a Freddie Mac loan. You can just go on their websites and do a lookup, and they have those on their main pages to see if your home is owned by them.
Okay. Now, with these agencies, and I found out that my home is working with those agencies. If my loan is refinanced, will it lower my payment?
Well, it can lower your payment. It just depends on what your current interest rate is. If your interest rate is higher than what the current market rate is, it's going to immediately lower your payment when you do a refinance. There are a lot of people who took advantage of interest-only loans, and I think they were great opportunities, but they were given to the wrong people, I think, at sometimes. So you may have a lower payment with an interest-only loan that even though you're refinancing at a lower interest rate, because you're now going to have principal and interest in the payment, you may not see a decrease in your payment. But the main reason for the program is to create stability, to give people more affordable payment and more affordable programs that they can really maintain their payments and keep going with.
Okay, and yeah, I know you mentioned about the interest rate, and you mentioned a little bit about the loan types. What about the term? Is it going to be the same length? If I've been in it for 5 years, it's going to be 25 years, or to drop it? What about the term of the loan? Do it change the terms?
Well, it can change the terms, but the typical term limits on the HARP program and the interest rates that are offered are typically going to be 15 years or 30 years. There are programs out there that offer 20 and 25, but it doesn't work with, the HARP program, because we're really focused on how can we make sure that our current homeowner has a more stable program so that they can continue to make their payments and most of all take care of their family.
Okay, and a lot of the homeowners are, they have the first and the second and things of that sort.
Right.
How did that work if they have a first mortgage or a second mortgage or first or second lien?
Outstanding. Well, if you have a first and a second trust, sometimes people may have a home equity line. That's still considered a second mortgage as well. Okay. You can still participate in this program. The only requirement is that the person who is in the second position or your second trust company has to agree to remain in that same position, and this program will allow your first trust to be refinanced into a more stable program, which then allows you to save on interest, save on money, so that you can effectively pay off the second trust. But you can't combine them together and pay them off. This program isn't designed to consolidate debt or give cash out. It's really about stability and making sure homeowners stay in their homes.
Okay. Yeah, and I like the idea of savings and paying some things. Well, another one, can I actually pull money out of this? Can I get cash out?
No, it wasn't designed that way. But I mean, I guess you can look at it and say that you're getting a cash benefit if we're lowering your payment. If we lower your payment $300, that's about $4,000 a year that you can pick up and put back in your pocket and take care of your family. But no, it's not designed for that. It's really just to put you in a better term and a better rate. Sometimes we call them rate term refinances.
Okay. All right, super. The other thing here, I know I mentioned that maybe I was paying my mortgage on time. What if I'm delinquent? I'm behind on my mortgage payment. Would I qualify for the HARP?
Well, the HARP program, that is one of the guidelines that you must be on time within the last 12 months. And sometimes people fall behind. I often hear, well, I thought this program was designed to help people who fell behind. Within the Making Home Affordable program, which HARP is a part of, and then you also have HAMP, which is Home Affordable Modification Program. That is the alternative. If you're behind and you've fallen more than 30 days behind, then what we'll do is recommend to our clients that they should go through the process, working with a counselor, to do a modification on their loan so that they can then take advantage of lower interest rate options as well as a savings on their payment possibly.
Okay. And so you did mention there that if this HARP program do not work for me, and give me a little bit more detail in reference to some of those other options that I may have if this HARP do not work.
So like I said earlier, the HAMP program, Home Affordable Modification Program, basically a loan modification, because the government and Fannie Mae and Freddie Mac, they wanted to create as many opportunities as they could for people to take advantage of current interest rates, get in more stable programs, have affordable payments. The HAMP program is you would work with a housing counselor and you'd work with your current servicing lender. Now, your servicing lender is somebody, it may be different than who you actually got your loan through. Your servicing lender is the lender that you're making your payments to. So you would work with them and they would help you restructure your loan or modify it. And it will change the interest rate, it could change the payment, it could change the time period. It's just a number of ways of doing it. But that's the other way to help people.
Okay. And I'm working with my servicer, my mortgage loan servicer, and they maybe not do HARP. Or is there any other options? Can I work with another servicer or another mortgage company?
Well, since you mentioned that, the HARP has come out into 3 different phases. 2 of them have already been approved. We had HARP 1, which it helped a lot of homeowners who were upside down in their homes. HARP 2 came out there and said, we're going to extend some of these requirements and not have so much focus on credit scores and everything, because we really want to help boost the economy and keep people in their homes. Now, HARP 3, which hasn't been approved by Congress yet, is a program that's basically saying that even if you're not with Fannie Mae or Freddie Mac, the government is trying to and the housing industry is trying to find a way to help those homeowners as well. So that's something that's still in the process, hasn't been approved yet. So it should be coming up soon because they're looking to help homeowners any way that they can.
Okay, and so here, just directly to our audience, basically, if they need some relief in reference to their mortgage, what would be some of the first things, immediate things that they should do in reference to looking for relief on the mortgage?
As far as if they're upside down or if their interest rate is higher?
They're upside down, and the mortgage payment is high, and so they're looking for some way of lowering their payments. What are some of the things they should do, places they should search for help?
One thing that you should do is either go to FannieMae.com or FreddieMac.com. Look on their main homepage of their websites and see if your home is first. You can put your address in there and, like your social to see if your loan is owned by them. And then follow their 1, 2, 3 steps of how you can go about finding out if you qualify for any of the HARP programs. Another thing that I recommend is to call your servicer directly and say, what are the options that you have? Because even though the HARP program is a program that the government has put together and, has really put a lot of effort behind helping homeowners, some individual services have special programs within their portfolio that they can help homeowners. So definitely don't hide from your servicer. Give them a call so that you can understand what may be available. And then third, contact a person like me to say, what are my options? Because when you're stressed out and you're worried about how do I fix this problem, how do I find a solution, sometimes it might even be easier just to say, can you help me? You describe your situation and I come up with your solution.
Right. Yes. And are there classes or community organizations that you work with? I know you work with First Home Alliance, and also if a person comes through First Home Alliance would say, this is one of our partners we're working with, what are some of the things that they can prepare prior to meeting with you?
One thing that I think a person should do if they're looking for opportunities to put themselves in a more stable program or a more affordable payment, one, make sure that you have your budget written out. Two, make sure that as far as basic documentation, because listing your budget is more than just what do I pay for my car payment and my credit cards, but what do I spend on gas? What do I spend on food? Write out your monthly budget so that we can see what type of money is coming in, what type of money is going out. Some basic documentation could be 30 days pay stubs, your most recent 2-3 months bank statements, and then your last 2 years W-2s. Because when it comes to lending money, people always say that you hear banks aren't lending money. Well, banks are lending money. That's the only way they stay in business. But documentation is key, and we look for trends, and how you make money, how you save money, and how you spend money from year to year. So our goal is truly to figure out a way to solve your problem, not to tell you no. Nobody wins with a no.
Yes. Yeah. One of the questions that comes up, I know with the budgeting and everything, with the refinance, what about credit? How do credit scores? Are they taken in consideration?
Credit scores are taken into consideration. Now, here's the thing about credit scores, because I often teach, of course, when we teach classes to our homeowners or potential homeowners, it depends on the market. 5 or 6 years ago, credit scores were high on the totem pole as far as determining what product, what rate, and what program. But today, it's sort of like a mixture. Credit is important, but it is not the decision making. So sometimes people ask me, well, if I have a 620 credit score versus a 700 credit score, do I get better interest rates? In today's market, you might end up with the exact same rate. But if we're on the edge of whether you get approved or don't get approved, a higher credit score does have a better effect on you.
Okay. All right. Well, super. Thank you for sharing that. And we want to move forward here, and we're coming up on the close. But before we close, I would like to share some questions that have came into our inbox. Here's a question here, and actually I'll let you help me with the question. Just a quick answer. It's a two-part question. Individual asked, they lost a home to foreclosure, and the sale was around 2009. And how long will this information stay on their credit report? And also, will the foreclosure prevent them from becoming a homeowner again?
Okay, two parts. A foreclosure will stay on your credit report 10 years, 7 to 10 years. As far as stopping you from being able to buy a home again or get financing again, no, it doesn't. But you have to work with particular lenders and see what their guidelines are. The base guideline says that after a foreclosure, it's going to be 3 years from the time that your home is sold to someone else before